Hey guys, let's take a look at the latest Ethereum article for BraveNewCoin. So I gotta say, I'm not often surprised when I go through my typical analysis of a coin, but I was surprised in a lot of metrics in a good way for Ethereum here. And I think what all of this boils down to, for me, is a rising price raises all on-chain metrics. So that's going to be a common theme here. All these on-chain metrics have been increasing pretty steadily and strongly since January. Now that wasn't necessarily the case, mid-February, but since then, so this is hash rate and difficulty, and hash rate has continued to increase since January, which is a good sign for any chain, especially Ethereum, because of the uncertainty regarding progressive or programmatic proof of work, which is an attempt to remove ASICs from the chain. There's a question mark as to if they'll actually introduce this. It's effectively the same as Monero, for example, switching their consensus algorithm to RandomX to remove all ASICs from the chain. The issue with ProgPow is that there's a conflict of interest between the people who are championing the change and their connection to GPU farms or GPU production, because it would favor GPUs over ASICs. So that's an interesting political thing to watch over the next year. And of course, the other change coming for Ethereum's consensus algorithm eventually is a move to proof of stake. So their idea is we're going to continually punish the miners from a profitability perspective and push the chain to proof of stake. That's what all of these difficulty increases were meant to do. But proof of stake, the code, the protocol change keeps getting pushed back because it's not ready, or it's not yet had enough time to be tested, and that brownie needs to stay in the oven a little bit longer. But bottom line here, hash rate's up, that's bullish. You can see these are the miners, the ASICs that are currently available. There's another one that this website I use, ASICMinerValue.com. I don't know why Lindsay, Linzhi, I don't know why their ASICs aren't listed here, but if you know, let me know. Again, profitability extremely high for these ASICs at 4 cents per kilowatt hour, which is what any massive farm is getting, or lower. They're not getting the retail residential, US 12 cents per kilowatt or whatever it is we pay here. Most likely they're getting 4 cents or lower, and they've prepaid in advance and they have special contracts. So mining at a massive scale is completely different than you and I just turning on our GPU and going to town on our 12 to 15 cent per kilowatt hour. So this is transactions per day in the line here, and transaction fees. And similar to hash rate, in mid-February, transactions didn't look so hot. They made a lower low, and that's not what you want to see if you're bullish, right? You want to see continued rise of transactions. On-chain use is typically mirrored by price increases. So if price is increasing and on-chain use is decreasing, that's a type of bearish divergence, meaning the utility of the actual chain isn't supporting price here. Since mid-February, late January, we're seeing a pretty decent rise in transactions per day to the point where it's breaking multi-month highs. So it's breaking a range. That's what you want to see if you're bullish. Just like if you're bearish, you want to see progressive lows. If you're bullish, you want to see progressive highs. So for the next few months, I'd like to see this transaction trend continue to increase. And fees aren't really a concern. They've been down pretty good in general since October 2018. It hasn't really surpassed the insanity of CryptoKitties clogging the chain in January 2018 or anything like that. Now, if we look at NVT, which is the line here, it's an inverse metric of economic utility, and the fill is active addresses. We'll start with active addresses, similar to transactions per day, increasing, breaking multi-month levels here. That's bullish. That's what you want to see. You want to see that continue to increase, continue to break highs, just like transactions per day. Now, NVT is a bit of an interesting one because if I saw this in a vacuum, this would be extremely bearish. This is basically effectively an all-time high for NVT. Now, what NVT does not include is anything DeFi related. So in my mind, on Ethereum, NVT is basically a metric that is irrelevant. Now, that isn't to say that all DeFi transactions are created equally or should be considered for utility of every chain. But what I'm seeing here doesn't represent, it's basically the oddball out. NVT is the only thing that keeps increasing when it should be decreasing if economic utility is up. Now, what NVT might be showing is basically the price rise is outweighing the economic utility. So the price rise is outweighing the active addresses, the transactions, the average transaction values, that sort of thing. I always talk about ICOs. I'm going to talk about it until they go to zero for token sales ended. But, currently we're seeing 5 or so a month versus 100 plus at the peak. We're seeing raises per month sub $1 billion by a lot. And at the peak, it was almost $6 billion in June 2018. Pretty insane. So it's a really nice representation, I think, of the rise and fall of token sales. A lot of this has to do with regulatory stuff globally, just mania in general for ICOs, that sort of thing. It's basically all gone now. Looking at ICO Treasuries, there have been quite a few old treasuries with a lot of ETH selling over the past 30 days. So 116,000 last month is certainly higher than it was for the past 6 months. And I'd kind of expect that for a couple reasons. Again, the price rise. If I'm a company with a treasury in ETH that just saw a massive drawdown since July, and all of a sudden we pop back up to basically July levels, I'm saying any sane person is saying to themselves, okay, I'm going to take some of the treasury and sell it to cash here to get rid of the volatility risk. The other thing is a lot of these projects are entering their 3rd, 4th, 5th year for operational costs. So their overhead, general business costs, they're definitely feeling some heat, and they're going to have to sell their treasury to pay off just employee salaries, that sort of thing. So this isn't too abnormal. If this was 3,000 or higher, then I'd probably say, whoa, what's going on here? And what I ultimately want to see is this going to zero, because this just represents a supply glut that will continue to sell the pops every time we go up. I think any sane person who has hundreds of thousands or tens of thousands in their ICO treasury at this point is not thinking long-term, perhaps. They're probably thinking, okay, I'm trying to get this project to launch. I got to pay off all this stuff. How am I going to do that? I'm going to sell my treasury. Looking at the DDEX stuff is cut off here a little bit. Let me just zoom out. Okay. So looking at the DApp stuff, I rarely ever talk about the DApp stuff. So this actually looks really good for ETH. All of these are exchanges or DeFi related, lending, that sort of thing. So either DApp Radar cleaned up the fake stuff, or they cleaned up the nonsense gambling stuff, or the chain is just moving towards lots and lots of volume on DeFi. Both could be possible, but it's hard to know because I haven't been watching it every day, what they're doing on DApp Radar. So if anybody knows, let me know. But this looks really good for ETH. It's cleaning up a lot of the nonsense that was on the chain for dApps, and it's maturing into DeFi type stuff. And looking at ETH locked in DeFi, it's down from the peak, the all-time high, but it's still above 2.5 million, closer to 3 million. Certainly bullish. Anytime we lock up supply, it's bullish. Anytime we reduce supply or sell supply, it's bearish. Just in general, just simple supply demand stuff. So the more we lock in here, the better. Not necessarily a healthy reason, because this is people leveraging up on DeFi, and eventually you're going to have a long squeeze on all those people who are leveraged or selling, or if you're margin long on DeFi stuff and this stuff goes down, eventually the crows are coming home to roost, baby. And looking at Google Trends, not too exciting, but it did have a nice little pop with price, which is what you'd expect to see. Again, price raises all metrics in my mind. So nothing out of the ordinary there, but it's good that it's up from basically zero. It's not pre-2017 levels of zero. It's definitely like a sustained just simmer. So to see some bubbling up is always good. All right, let's take a look at some charts. I always look at the Bitfinex open interest. The volume profile of the visible range, these horizontal bars here, just shows you who was buying and selling at what price. I look at an oscillator. In this case, it's relative strength index, RSI. I look for pops or bearish, bullish divergences, that sort of thing. The 50, the green, the 200, the red, EMA, just moving averages, and yearly pivots, which are mathematical based on the previous year's high and low. So we'll start with open interest on Bitfinex. This is an all-time high in ETH and close to, but not an all-time high on the notional value, meaning ETH times the ETH price. That's what notional means, just the underlying USD value. So to see this and be bullish is concerning because this looks like a crowded trade to me. Now, historically, maybe Bitfinex open interest hasn't really had a lot of bearing on price action. I mean, you can see here when shorts were at all-time high, they got squeezed almost immediately. And since then, they've just been at a low level. But ETH longs have continued to rise pretty much since April last year. Even on all this dip, they continued to rise. So if this goes to Pound Town, Coresville, then there's definitely going to be a long squeeze here. Longs are going to come off, but that probably wouldn't happen until it breaks 120. Until it breaks this previous low, I don't see these longs even thinking about exiting their positions. So there's no real short squeeze fuel, which isn't like the end of the world, but I certainly would rather see this flipped, shorts at all-time high if we're trying to make higher highs here. To me, it just looks like it's bouncing between these yearly pivots, this VPVR zone, support resistance, and it's confirming support at the 50-200 area. So this 200 zone is massive psychological level. This 250 to 300 zone is massive psychological level. So it's probably going to need to consolidate in the zone, figure itself out. You can see RSI hit levels not seen since 2018. Just how insane this run up was. So it definitely needed to cool off, and it's good that RSI is chilling out. It's good that we're seeing this 25% pullback because you can't sustain what we did on this parabolic move, week over week. What we want to see, like we did with this bearish trend, just slow sideways, lazy river, tubing type down or up moves, not these massive 1 hour parabolic, just buying insanity. That's not sustainable. Looking at the pitchfork, bullish pitchfork for ETH with these anchor points here. Not a lot of history here, so it's hard to say if this is confirmed yet, but it does look pretty good. I'm always pretty confident in early pitchforks when it respects the median line. So the median line is what price is going to want to touch. It's a magnet. It's a magnet. If it's up here, it's going to want to come down. If it's down here, it's going to want to come up. But in general, it looks good. It's even respecting this lesser support resistance zone. So I'd expect this to continue to chill around the median line here. And then these are the 150, 666 are the min-max for the trend at the current rate. Looking at cloud, so cloud is all bullish cloud, price is above cloud, TK cross is bullish, lagging span is above cloud and above price. What we had here over the past couple days is a Kijun bounce. So once price gets extremely oversold or overbought in this case, and establishes a range high and a range low, you'll see this TK separation, TK disequilibrium, or C-clamp as some people call it. And when I see that, I immediately think to myself, okay, it's probably going to mean revert to the Kijun here. So it's dangerous going long if you're up in this region, just like it was dangerous going short if you were down here because of the separation from the TK lines. Similar here, TK lines extremely spread apart. It's a danger going short when it's calling for a mean reversion, especially because this had a bit of a falling wedge action as well. So this had an equilibrium triangle, which has a 50-50 just in a vacuum, but taking into account how overbought this was on RSI, how overbought this was being above the Kijun, there was a high probability that this was coming back a little bit, to the Kijun. So that's what it did. This next week, it's going to be, I'm not going to use the word critical, but it's going to be critical to support at that Kijun level to continue the bull trend. So it'll be bullish until it breaks 200, basically. Then ETHBTC has completed the Adam Eve, which is bullish, broken above the cloud, bullish, broken above the 200, which is bullish, broken above the yearly pivot, which is bullish, and probably most importantly, broke above this massive multi-year support resist zone. So you can see it was resistance here, broke through it, support, 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 then it was down below. You don't always see it break immediately on the first try, so this is very bullish. It's also the first time in 2 years that it's basically above the 200-day moving average. So I'd expect this to return to 0.03, 0.035 over the next few weeks. Again, RSI was completely blown out. Second highest RSI ever on history. So that definitely needed to come down. I don't expect it to come back to 0.25 anytime soon. I expect this to reconsolidate at those key support resistance, historically 0.256, something like that, and push towards the 0.34, 0.35 zone.